Hi, this is Evangeline with V-Chic Designs and Alley Naturals, and I was asked to do this video in regards to money matters. I guess primarily focusing on savings and investing. I'm gonna make this video heavily focused on investment because this is something that I'm currently very passionate about, and there's some falsehood around investing that I would like to share. Hopefully someone watching this video is going to be able to tap into what I have to say and get some benefits from the video. So I do have my notes over here, so I'm going to be referring to it just because I don't want to be all over the place. I want to stay on task, get my points across, and hopefully I'm clear enough for anyone watching to understand. So the first thing I'm going to focus on in this video is budgeting. And the reason why I want to focus on budgeting as the first thing is because if you can account for your dollar, or your penny I should say, wherever your money is going, that's going to help you, it's going to allow you to be able to save and invest. Because if you're not able to account for your dollar and money is coming in, money is going out, and you're not sure, or you don't even know where the money is going, you're not going to figure out when you want to save, how much you're going to save, what is feasible for you to save, and what is a good amount to invest. So you first want to make sure you get on the budget thing. You want to make sure you account for your money. Any penny that is coming into your household, you want to make sure you know where it's going. Okay, so the first thing is, once you're able to budget, then you should be able to save, and then you should be able to invest, because then at this point you know where your money is going. So when it comes down to budgeting, there's a lot of tools out there that you can use to budget, or you can just simply use a paper and a pencil, or you can use Excel if you want to do it on your computer. But you don't have to make it so crazy to complicate things and make it scary to approach. You want something that you're comfortable using, so it's not a task every time you have to do your budget. And I would recommend doing your budget on a regular basis. Some people do it monthly. For me, I do budgeting on a weekly basis, and it's just because I don't have a fixed income. My income it fluctuates. It's coming in on Tuesday, Wednesday. It's coming in any time of the month. So unfortunately I cannot budget on a monthly basis. I can have an overview, but I still have to be very strategic when it comes to my weekly planning in regards to budgeting. So do whatever works for you. If you have a fixed income every 2 weeks, 1 month, whatever it is, figure what works for you and go for it. But you want to make sure you budget. And in budgeting, make sure you account for savings and investing. Also, you want to make sure you have an emergency fund in case anything comes up that you're not prepared for or expecting. You can have that money saved up and ready to use for anything that is unexpected. I'll move into savings. And when you have your budgets done right, you're able to account for money that you can put aside for savings. And what I like to do when it comes to saving is just automate it. Don't think about it. Let that money go into your savings account every month. If you're like me and you don't have a job where you have a direct deposit or wherever the case is, you can set it up in a way where every month from your bank account it goes into your savings account. You can set it up that way. If you have a regular job that is W-2 based or whatever the case is, you can just have the money come out of your check and be direct deposited, and you don't think about it. Maybe the only time you interact with that account is when you receive your statements. Other than that, don't think about that money. That money is for savings. Okay, so we've gotten budgeting out of the way. We've talked about savings. Like I said, I want this video to be heavily focused on investment. And so I'm going to now talk about different ways you can invest. You can invest through the stock market. A lot of people don't want to touch that subject because they think like it's a gamble. Like I actually had somebody tell me it's a gamble. Okay, so this is what I said. I said if the stock market is a gamble, which it might be, but life is a gamble. There is no 100% assurity to anybody on the face of the earth. Anything can happen to anybody at any time. So you're not going to say because the stock market is a gamble, you're not going to participate. when you can make money from there. It makes, I don't even understand that logic, because if that's the case, then don't live life. Stay locked up. Even staying locked up in your house all day, it's a gamble, because anything can happen in that house. So people who talk like that, I dismiss them quickly, because it makes no sense to me. Anyway, so I'm going to talk about investing through the stock market, and there are several different ways that you can invest. You can invest into different accounts. Like currently I have 3 investment accounts. I have one through Capital One, I have a Vanguard account, and I currently use Robinhood. Maybe you haven't heard about Robinhood, but it's been around for quite some time now. And I'm going to focus on Robinhood a lot today, because number one is where I have a bulk of my investments. And the reason why I have a bulk of my investment in Robinhood is because they do not charge commissions. And commissions are pretty much standard when it comes to those other investment accounts like Capital One, Vanguard, TD Ameritrade, Scott Street, and all that. It's where when you're buying and selling, you're paying commissions for doing so. So if you're buying a stock at $5, for example, you in the case of Vanguard, you pay $7. I think it's $7 or $7.50. I'm not 100% sure. I think it's $7. I'm more leaning towards the $7. But you pay a commission to buy that stock or to trade that stock. I mean, to buy that stock or to sell that stock. So you're paying commissions to trade. Same with Capital One. Unlike Robinhood, you do not have to pay commissions. Whatever the stock is, the share is selling for, is what you're going to pay. There's no commissions. And there's a whole separate video on how to make their money. You can go and do your own research out there. I've already found out information before I even started investing in Robinhood. So I know. So one thing I'm going to also bring in is when using my Robinhood account is also using a program that I have through TD Ameritrade. You don't have to have investment with them. You can just go onto their website, go to the Think and Swim, search it on Google, and you can register. You don't need an account. You just need to use their platform in order to watch the stock market. This is really good if you're day trading. Hopefully you can see this from over here, but this is what the screen looks like. You can have a watch list of the different investment of funds you're interested in investing in. And what's going to happen is you're going to see all the changes, what's happening with the fund, if it's going up, and this is on point. This is good timing. It's not delayed. Unlike the Robinhood account, I think it's like 5 minutes behind. I'm not sure. But with this, use into the stock market, and there's some other tools you can use, but I use this. It's free. You just download it onto your computer, and you can use this and just watch it. And then the great thing about this is you can set alerts. So if you're watching a particular fund, for example, and it's maybe $5 and you want to probably get out of that fund because you've probably been losing money, you can set alert and say if this fund reaches this much money, or if it reaches what, $4.50, whatever the case is, I want to buy out. And then you can set an alert on here so you'll be notified, and then you can go to your app if you're using the Robinhood app, and you can trade that day. This is if you day trading, okay, because you're watching it. And generally with day trading, you sit at your computer and you're watching the stock market. Sometimes you can make good money within a matter of 15 minutes. That is if you've studied the market and you know exactly what you're doing. But it comes with time. It comes with consistency in order to get better at it. Now, when you decide to invest or use the stock market for your investment, and now you've understood commissions versus non-commissions, and you decide whichever way you want to go, there are different types of orders that you can have when you are trading, buying and selling. You can have a market, you can have a stop loss, or you can have a stop limit. Pretty much what that is, if you go for a market, that means whatever the stock is selling for that day, for the market day, that is what you're willing to buy it at, or that's what you're willing to sell it at. A stop loss will be if the stock market is trading for whatever amount, but you're not willing to go beyond a certain amount. You can put in a stop limit, a stop loss, where you can say if this amount goes less than $3, this share goes less than $3, I will not sell it. So anytime you put in that type of order, your shares are not gonna sell unless it goes to where you want it to be. So you set the guideline for that. Similarly, if you put a limit in, what you're saying is the most I can buy this share for will be $15. So if it goes to $16, you're not going to make any purchases during that time. And you have the option to set up your restrictions to the day of the market, meaning once that day is over, it starts over for you. Or you can put it in where you can set up and say, until I change this is my guideline for this stock. I'm willing to buy a share at this amount of money, and this is going to stay in place until I decide to change it. But whereas when you do it on a market, good for market day, that means after the market day, it's not going to do anything. It's not going to follow your lead. It's not going to follow your guidelines because the market is over and it's a new day. Okay, and I like to do it that way because I feel, in my opinion, I have better control. I can know what's going on, because I could have a crazy day. I don't have any time to go into my account and make changes, and then things go really bad and I lose a lot of money. So I like to have it cut off at market day, and I can start over the next day if I wish to. So those are the type of orders you can have when you're buying and selling stocks. Now you have options to trade as well, different types of trading you can do. You can do swing trades, you can do day trades, and you can focus on dividend strategy when it comes to trading or investing. And when we talk about swing trades, what it is you buy a stock today at one price, and tomorrow you sell it for another price. Whereas a day trade is you buy a stock in the morning at one price and you sell it that same day before market closes at a different price. So that's day trading. And then if you focus on the dividend strategy, pretty much what you're doing is you're looking for funds that have high yield dividend, where you can get paid out more money every year because they paid high dividend. I've seen some stocks up to 22%, 22.62% that they pay out in dividend. So you could use that strategy if you want to do so, and then maybe you just look for stocks that pay high dividend and just stay there. Those stocks generally are not very volatile. They're not going crazy high and crazy low, whatever. They kind of maintain themselves. You will see a peak here and there and things like that, a dip here and there. Not unless if the company is just going bankruptcy, then that's something totally different. But you will see, some movements up and down and things like that. But because of the high return on the dividend, you're willing to invest in those funds because at the end of the year, you're going to get a return on your money. Now with that type of strategy, if you're going to go that way, then you want to make sure you're putting enough money in order to see a good return. Because come on, even if it's 22% return on your money, if you only have 2 stocks in that fund, it's not going to give you much money, much return. Not unless if the stock is like, I don't know, Amazon stock, which went up to $1,000 a share, maybe something like that. Then you could probably see, if they're paying high dividend, you could probably see something great. All right. So I do have this document, and I don't know how I'm going to be able to share this document. I'll see if I can still find a link, because I pulled this article about 2 or 3 months ago, where it talks about double-digit dividend plans. So if you're interested in maybe diversifying your portfolio in a way where you can focus on some funds that would yield high dividend, you can look at here. Or you can even go on to Morningstar, put in the ticker symbol of the fund, or for example, put the name. You can go and say Target or these big companies that you're familiar with. You can go and check them out and see what the return on the investments are, the dividends. Or you can just do a Google search. That's how I think I found this article. And I actually, based on this article, I was able to invest in a few of the funds that I found in here. And they're not expensive. Some of them are like $10, $9 a share. So I was able to buy a few shares in those companies. One of them being PIMCO. I was able to buy a few shares in there, and then also because they pay a good amount on the dividend. The return is about 22.63, and this is a while ago, so who knows, it might have changed. But I was able to go there, read their graphs, see what they've done over the year, if it's consistent and things like that. Those are the things you want to see. And you can go to Morningstar and you plug in the ticker symbol of the fund, and you will get all the details. You can even go to Yahoo Finance and you can find all the information you need to know. And that's why I tell people, if you're going to invest in a fund, go and do some research on the fund. Look at the financials, read the financial report and see what they've done over the years, and then see if it's a stable company that you want to invest in. Keep in mind, when you're buying stocks in the company, you're buying ownership, a part of the company. That's what it is. So if you have a mindset of this is my company, then I think you will look at things differently, because that's what you're doing. When you buy shares in company, you're saying this is part of my company. If you work well, you could own some of these companies. Warren Buffett is a good example of this. So it's think about it that way. Don't only think about, oh, it's a stock market and just have a far understanding of what it is, but go in and dig out more information about these companies. Okay, so we've talked about day trading. Now, one thing I want to bring back to you about day trading is you want to be careful. If you have a cash marginal account and you're day trading a lot, you could be flagged and you may not be able to do that anymore. A lot of people like to do day trading when it comes to penny stocks. So you can buy a stock, say for $16, $18, and maybe buy about 15, 10, 100 shares or whatever, or even more shares. And it could be for that price, and then maybe in the evening it's jump up to 25 cents. When you sell that, that's a lot of money. That's money you can get in no time, in a short period of time. So a lot of times people would do stuff like that when they're day trading. I don't know, in my research I've done, I don't know if people do day trading on things like Amazon or Tesla or Facebook, because those are big ticket funds. They're expensive. So I think for those ones, you want to keep them for a while, especially if you read the company history. You want to hold on to them for a little bit. And you can't have a flick of mind when it comes to investing. You can't keep worrying every time the stock market does something crazy, because when it goes low, it's gonna go high. That's just what it is. And it's because it's tied to supply and demand. Common economics, basics, economic 101. If there is high demand, supply will be short. And if it's high supply, demand will not be as much. So it's just a law of the basic economics 101. So things will go bad, things will come up, things will go bad, things will come up. So you don't want to keep focusing on that, but it doesn't mean that you can do some day trading here and there or swing trading. So that brings me to swing trade. Let me go back to day trading, clarify a few things there. Okay, so like I was saying, if you have a cash account, you can day trade for as many days in the week you want to day trade. You're not going to be flagged, nothing of that. However, keep in mind, anytime you put money into your account or you fund your account, the money has to take 5 to 7 days, I think. I know for sure 5 days, but 7 days maybe, for it to settle. Pretty much what it is for it to become available for you to trade. So who's going to be sitting and waiting for 5 to 7 days for money coming into the account to settle before you trade? What if the market's doing exceptional? You want to trade, you want to be able to get on there and make money, and some funds get out. So you can have a marginal account if that's something you don't want to do, like the waiting for cash to settle and things like that. So with a marginal account, you can trade, you can day trade, but you can only day trade 3 consecutive days. Okay, you cannot, if you go for the 4th trading day, day trading, your account will be flagged and you'll be required to have at least $25,000 in your account. It'll be suspended. So you don't want to do that. You want to make sure, if you're going to day trade, keep in mind, you keep your track of what you're doing. And I'm not talking about 3 days in a week. I said 3 consecutive days. So if you day trade on Monday, you day trade on Tuesday, on Wednesday, on Thursday, you cannot day trade. So if you're not invested in other accounts, you cannot day trade. You cannot do anything else in the other accounts, especially if you're below 25 grand. You can't do anything. You have to wait until those day trade fall off. So if you day trade, say you hit your mark on Wednesday, you cannot day trade on Thursday and Friday. You can swing trade, but you cannot day trade on Thursday and Friday, until next week Tuesday, because one will fall off on Monday. Then you can do it like that, or you just wait the whole week again before you day trade. But then you don't want to do that if you're heavily into making money quickly. For swing trading, you can buy stocks in the morning and trade it in the next day. That's swing trading. You can do that, but then people don't like to sit on penny stocks for too long because they're so volatile. They keep going up and down. I mean, you can buy a stock at maybe 25 cents or $1 in the morning, and by the time it's evening, that stock might be like, I don't know, maybe 50 cents, So people don't like to sit. A lot of times, in all my research, a lot of times people don't like to hold on to a penny stock for that long. They use it a lot just to get quick money, quick turnaround. And I think that's a good idea as well, because if you buy a stock at this price tonight, or by the time market closes, and then tomorrow it just dips, it's almost like you lost a lot of money. I mean, you can hold on for a few days, but sometimes they stay so low, they don't get up to where you want to just get out of it and get done with the fun. So you have to do your own research and figure out what's going to work for you, and and then go from there. Read financial reports of the companies that you're invested in. Go over their financial reports, see what's going on in the financial world with the business and things like that. And read financial news. And a lot of things play a role in how the stock market is going to move. I'll give you an example. When Amazon bought Whole Foods, there was talk about it in the media before it happened. When Amazon is one of the stocks that's on my watch list. I keep a close track of them. And when Amazon was sitting at I would say 950, 60, I think. I'm not 100% sure. But when that hit the news that Amazon was going to buy Whole Foods, it went up like this. And that's the time you could do a quick swing and get some money if you day trading, So a lot of things can play a role. If a great basketball player is going to be signed on with Nike, of course, Nike stocks are the shares are going to spike. So you can, things like that, you need to just keep informed. Stop reading all the gossips and on social media about people you barely know. Focus on bettering yourself and getting things out of life that you want, and forget about everything else. Now I think I've talked about day trading, swing trading, using the dividend strategy. I'm going to move into investing in real estate, but going the crowdfunding route. And pretty much what it is you can purchase a building, or into a building, a commercial property, or a property, using monies coming together by everybody else. What that means, if a building sells $2.5 million in California, you can buy into that building. You can start at $1,000 or whatever amount you want, but the minimum is $1,000. You can buy, well, at least the ones I've come across, you can buy into that, and then everybody else, all the different investors, regular people who's buying in, will come up to that money for that building. But this is more long term, so this is not something you're going to be done with in 2 months and you get money out. No. If you want something like that, you must have that as well. Have something midway, and then you can have this long term. And with this type of investment, you cannot take money out before 5 years. So if you're going to go for that, and I always recommend, you must have something long term. Everything cannot be quick. You got to have some long term investment where the money is sitting there and growing, it's growing. So if that property, say, starts to get equity because maybe they build a great cinema in that a theater in that area, or maybe they open up a big estate some rich guy bought, and this property is gaining equity, you're also gaining money because you've bought into the company. Into the property. So if that building sell, or whatever the case is, after the maturity, you can get money out, and you can get some good money out. So this is a way for people who want to invest into real estate, but they don't have the huge cash to come up with through maybe a financing option through the banks, or maybe they haven't saved up money enough for that. So you can use that. That's another way to invest into real estate without having to actually purchase the entire thing on your own. So I would now move on to something more psychological. A lot of times people talk down on money, and I may have done it in the past as well, where you look at, oh, all day you want to talk about money, but hey, life itself is not going to go without money. You need money. I don't care what anybody say. You need money to pay your bills. Your mortgage needs to be paid. Your rent needs to be paid. Your car note needs to be paid. You need to feed your children. You need to eat. You need money. Okay? And there's nothing wrong with anyone discussing money, talking about money, or whatever the case is. Now, if you make money a god, then that's a whole different thing. Then your motives behind having money is crazy, it's distorted, and it could lead you into trouble. But when you look at money as a means to live your life that you wish to live, you're only using it as a means. It's nothing to you. It's not gonna make you or break you, meaning you still have your core values. Money is just there to facilitate the things that you need to live a comfortable life. It's not your God. Then that's a better approach. And I don't fault anybody for talking about money. If anybody wants to speak about money and how they can obtain this and get this and want to be successful, and money is success and whatever, and that's what they look at as success, I don't fault people for that. And the reason why I don't, it may not be my whole idea or whatever the case is. I have my own philosophies when it comes to money, but I still respect the fact that they respect money. Because I found over the time is that if we change our mindset towards anything that we wish to get more of, acquire more of, it will attract us. So if you start to change your mind on how you relate to money, and stop being angry at people when they talk about money, or when somebody is rich, you're upset because they're rich, money's not going to come near you. Money's going to be afraid of you. Money's going to be like, whoo, she don't like me. She don't like me because she gets upset with people when they talk about me. So I'm not coming around. And I promise you, it is true. Before, I used to go to the grocery store. I get change. I throw the change away. Not necessarily throw it away, but I'll put it somewhere here, put it there. And before you know it, I can't even find what the money is, where the change is. It is money. It is money. You need to respect it. You need to take that change, put it in a safe place, and respect it. What I do is I collect my change and I take it to the bank, change it for cash, put that money back into my bank account, and take, if I need to put money aside for savings, I take some of that money for savings, or I use it for investment. So because I've started to have a new relationship with money and respect money, money tends to come to me. You don't have to think about how. The how is not important. Just respect money. And respect those who talk about money. Don't be upset with somebody if they talk about success and money and all that. Because in order for us to live the life we wish to live, we need to have money. I don't care what anybody say. And this is just my philosophy. But anyway, I think I've said enough on the subject. And so I hope that this is going to help someone out there. You know, don't think that you can't start investing because you're not rich. Let me tell you, you can start with as little as 20 bucks. Like with my Robinhood account, I started with $10. And I've grown my account. I keep putting money in every month. I set up a target amount for each month based on what my month is going to look like financially. And that money goes into my investment account. And I watch the stock market. I do a little bit of day trading. I do a little bit of swing trade here and there. Of course, I have some funds that I've invested in that is high yield when it comes to the dividends. So I make this video helps you in whatever way possible it can. Take what you can take from here. Like I always tell people, life is not a cookie cutter plan. You can't just take somebody's life and say that's what I want. You can take from here and then mix it together and make a whole new thing for yourself. So take what you can take from here and make it your own. Okay, go do life. I want to say thank you for listening in on this video, and I hope it helps you. Bye.